Good morning. Today is Wednesday, May the 3rd. The time right now in Singapore is 11:24 in the morning. And let's do a bit of a recap of what the Wall Street did overnight. We can see that Wall Street basically came off last night in anticipation of tonight's FOMC, which is the Federal Open Market Committee meeting, which decides on interest rates. And market expectation is that the Federal Reserve will use this meeting to actually hike another 0.25% higher to bring the Fed fund rate to within 5 to 5.25%, and this is what the market expect. But the main thing is what happened after the rate announcement is the Q&A session during the Fed chairman's press conference. So market participants will be looking out for a clue as to whether he's going to give us some kind of guidance as to what's going to happen after this latest rate decision, whether they're going to pause or whether they're going to cut interest rate. Market expectation is that they are seriously thinking the Federal Reserve hands are tight now because this week, again, we saw another bank fail. This time it's First Republic. This on the back of March, where we have Silvergate, we have Signature, we have SBV, all going under receivership. So we can see that this is causing a lot of stress in the banking system, and there is a lot to say about the state of the banking sector right now. The Federal Reserve the Treasury Secretary herself has acknowledged that there are about something like $620 billion worth of distressed assets holding by the banks. Okay, so we are looking at a very, very serious situation in banks. Most of the banks are practically insolvent, okay, because of very high interest rates as a result of the very aggressive rate tightening. So of course, we also saw last week that the US GDP is beginning to slide from Q3 of last year from 3.2 to fourth quarter of 2.6, and the latest reading is 1.1 in Q1 of 2023. So we can see we have a rapid deceleration in the economic growth in US economy. So on top of the banking crisis that we see, most participants are saying that the Federal Reserve now will be insane to be seen to be continuing its very aggressive rate hike to contain inflation at the expense of the economy and the expense of a developing banking crisis within the United States. So that is the market expectation, and this is largely explained why since March we can see that equity prices has been so aggressive trading to the upside, because they know for a fact that the economy is in deep trouble, okay? And that means the Federal Reserve may not have the luxury of continuing to hike rates at the way they did the whole of last year, okay? So this is market expectation. So do watch out for a spike in volatility at 2 a.m. Singapore time. That will be 2 a.m. tonight, okay? So do watch out for the expected spike in volatility. Okay, when we look at the Dow Jones, we can look at a 4 hours time frame. We can see that last night we have a very serious pullback all the way to 33,436.6, which represents 78.6% retracement from the bottom of 33,235 to the high of 34,257. So we can see this is a very deep pullback, but there's a very good chance because this 78.6 is the last Fibonacci, or I would say last, commonly determined to be the last, the deepest correction that you can see, and it managed to hold. And that could actually be a base in which we can see equity prices propel higher beyond 34,257. And we are looking at possible chart point here. Here we have the last, we have the December high at 34,712. So there is obviously a target. Now below that we have the year high, which was last traded in January this year at 34,342. So we are not very far away from that price if you use Monday's high as a guide. So between these two levels, okay, 34,342 to 34,712, that could be a pocket of resistance. But if the market should punch beyond 34,712, then the next logical target for me will be somewhere between 34,842 to 35,170. So this would be my immediate target if the market should take out 34,712. Okay, now remember, just above this we have last August last April high of 35,492. So by and large, we can see this is going to be a big barrier to cross, and I don't believe that you will be able to cross it at the first attempt. So let's look out for a possible rally tonight. But on the other hand, if the Federal Reserve did not give any hint that he's going to cut or even pause, then the market may actually unravel to the downside. The key here is to watch will be 33,235. If this level is broken, then we are looking at a slightly more bearish outcome here, okay? But by and large, I think the market is wanting to go up. So watch out for potential reversal to the upside, okay? Over the Nasdaq, we can see that the pullback last night was very, very shallow. The market only pulled back 38.2%, which is one of the shallowest retracement you can find. So in terms of bullishness, I think the Nasdaq 100 is by far the most bullish. So I think it's gearing up for to take out the high here that we saw at 13,720, which is now let me refer to the daily time frame to give you some kind of perspective. Now this high here is actually traded in August of last year, so 13,720 is probably the first barrier to cross, and if the market can actually cross this level, then we will be looking at somewhere at 14,135 to 14,712. Okay, so this will be a more likely area in which the market will be able to trade into if the 13,720 cannot hold this market here. So we do watch out for explosive move to the upside. Over in the S&P 500, we have a similar degree of pullback like the Dow Jones. Market did not quite hit the 78.2, but hit somewhere between the 78.6 to 61.8 retracement level, and that level is 4,079 to 4,102. Okay, so the market actually did stabilize here. Again, we want to see whether the market can take out the year's high at 4,195, and if it does, then we are looking at potentially a market rally all the way to 4,373 to 4,517. Okay, over in Asia, we can see that the Nikkei yesterday traded to a high of 29,278.8, and this morning we have no market because Japan is having a holiday. So this is based on yesterday's high price, and it is smack within this trading range of 29,077 to 29,466, which I believe to be an area of resistance. But beyond this, we have another layer, which is at 29,700 to 30,430. Okay, so we have two layers of potential resistance. So even if you punch beyond the 29,500, we have to contend with the next level. So by and large, upside is going to be heavy going. Okay, do remember, market will resume trading tomorrow. Okay, over in the Hang Seng, the market continues to slide lower. This morning we have a pullback to test last week's low. Currently it's trading at 19,567. Last week we have a low here that saw the market actually went down to 19,520. So we are very, very close to last week's low. So by and large, depending on how you look at it, there is a possibility market may actually rally on the back of an expected rally on Wall Street tonight. So if that's the case, we will see how the market react at 20,800 to 21,100. Even if this level is taken out, the equality of this move is at 21,556. So again, we want to see how market reacts at those levels if the market want to rebound. Okay, and over in China, we still have the Golden Week, in which China celebrate 1 week of Labor Day holiday, and we can see the market is not open. So what the price we can see here is updated up to last Friday at 4,030. So again, we have to watch. I think the market may reopen tomorrow. I'm not sure. I have not really looked into Chinese equity market, but I have checked the calendar. There is no public holiday in China for tomorrow. So for all we know, the Golden Week is a informal kind of holiday. Okay, so based on what we can see, there's a possibility if Wall Street kick higher, because over the last few days before the market closed last week, the market momentum suggests that we may see a bit more corrective rally. So that could be the case going forward. Over in energy market, we can see the crude oil yesterday have a massive fall. Okay, and unfortunately I'm on the wrong side of this trade here. I was actually long going into yesterday's trade, and this was totally unexpected. Market actually went down by almost 5% last night. So this was quite a massive move. So essentially I was stopped out on my long position, took a considerable loss here, but the market right now is into another bracket of prices. Currently I have no position. I want to see how prices react within $68.43 to $71.64. For all we know, the entire rally from $64.33 to $83.50 thereabout. Does not appear to be over. So basically, this is a much deeper pullback than I expected. So anyway, this is what trading is all about. Sometimes the market doesn't necessarily move the way you look at it. Okay, so to me, I am still of the idea is lower to buy, but again, I need to see confirmation because last time drop was quite drastic. Okay, so over in precious metal, we can see gold as oil was falling apart. We can see gold actually rebound, and this is the highest level of rebound that we have seen so far. This morning we have a high of $2,019.43, and like I said, this is the highest we have seen since the whole of April. So maybe not the whole of April, at least the second half of April. So this an area which is a very small window here, $2,009 and $2,018.40 could be an area of opportunity here. Let's see what happened in the afternoon. I think this could be an area in which it is quite ideal to sell. But right now, we don't have confirmation that we have seen seller coming into the market. But if we have a reversal signal coming out from this level, I think the market may actually be targeting at least $1,950, perhaps even as low as $1,933. So we have to see what happens. But basically, if you do not have the stomach to sell, which I don't recommend, maybe we should all step aside and let the market play out, because this is a very bullish market overall. So long term, I am still very bullish on precious metals. So if you're not comfortable selling like I do, then maybe we should step aside. Okay, so over in silver, we saw the same thing. We have a mysterious rise to $25.91 on Monday, although the market has unraveled all the way to retest the $24.50 level before it rebound. This market has been damaged. Okay, by and large, I think it does favor the downside a lot more than the favoring the upside immediately. So if the market have a pullback into this bracket of prices between $23.94 to $24.32, that could be an area of buying opportunity. Again, we have to watch. Okay, over in dollar, dollar unfortunately did not quite get to the level that I want. I was talking about 102.26 to 102.62 as being the ideal price in which I expect selling interest to re-emerge. Yesterday high only went up to as high 102.18 and a half. Okay, so did not quite my ideal level, unfortunately, because I would have loved to get out of my long position, but now it looks like the market may have already reversed and a temporary top may be in place. So if that's the case, maybe the market is going to trade downside rather than upside. So I'm going to see how I'm going to get out of my long position, hopefully with not too much damage. Okay, so over in sterling, we can see sterling have a spike out on last Friday to 125.84 before it pulled back. Now the pullback here is corrective in nature, and this bracket of prices I think is quite conducive for going long at 124.14 to 124.50. At 124.36 was a low, and I basically went long yesterday afternoon, and let's see whether it can take this market a lot higher, because if it can, I'm possibly looking at 127. Okay, over in euro dollars, I was originally short going into yesterday's position, but I have since get out of my sorry, I was actually short this euro dollar, but since then I have already gotten up because the price went on to only to test 109.41 and before it rebound. So it doesn't look constructive to sell. So I got up my position with a very, very small loss, and now I want to step aside and watch. I have no view of what the euro dollar may do in the short term. So I'm just going to see how the pattern plays out. Over in Aussie, Aussie has traded to a high last night to 0.6717 before it pulls back. Now we see this as a three-wave. Okay, three-wave rally into the bracket of 0.6696 to 0.6729. This an area is actually more favorable to the downside than the upside. So I think the market may actually go down from here and maybe even take out 0.6565, which I was saying could be an area of target here. So if that's the case, the market take out, go below 0.6565, it may actually go down to a bigger pocket of prices between 0.6380 to 0.65 half. Okay, so it's a big range. Okay, so if you have any view, you can trade accordingly, but I'm going to stay away from Aussie for time being. Okay, Dollar yen, you see, I think is where the opportunity may lies. Going into yesterday's trade, I did mention 137.30 to 137.90 has been an area where possibly we can see selling pressure. And true enough, the market only managed to do a high of 137.77 before it comes down. So now for those who have not sold, I have not sold. Okay, so if we have a bit of a rally today back into this very minor resistant area, which I think is going to be somewhere between the 38.2 retracement to the 50% retracement of this entire fall for 137.77. I think the area is 136.63 to 136.85. So this will be a pocket of opportunity to re-establish short if you have not already short. I think the market over the medium term is going to be able to come down all the way to test the 129.65. Okay, so that is how bearish this market looks like. Now over in dollar Canadian, we can see that dollar Canadian have a rebound back to 136.37 as last night, and it has been struggling here. So we can say that this is a near-term bracket of prices which I think may be vulnerable to the sell side, because this represents the 61.8 to 78.6 retracement point, which is 136.14 to 136.38. Okay, so this area that is more favorable to the sell side rather than the buy side, and it could be targeting at least 134.80. Okay, so do watch out. There's a possibility market may come down from here. Maybe it's good for 130, 150 pips. Okay, but that's all you can expect. Okay. Over in Bitcoin itself, we can see that the Bitcoin has a bit of a gyration of late. We can see the market has rallied from just under 27,000 to 30,000, and then come back down to 27,240 before it bounced back up again. So it has been very, very wild. Now, the most recent move was a challenge of 30,000 without making it, and market come back down. And it was this area at 26,666, which I has mentioned that the market is actually quite favorable to the for buying, at least on the short term. So this is a buying zone to me. 27,630 to 28,145 is my buying zone. I have actually gone long, and I think if this market can continue to trade the way it did, there's a possibility it may rally all the way to test the 30,000 one more time. Okay, maybe to test the 31,000 even. So if the market can go into 30,700 to 31,425, maybe that is an area in which if you are very long, then maybe that's the target for the time being. So this is all I have for you now. Remember, tonight FOMC is at 2 o'clock Singapore time in the morning itself. So if you are awake at a time, maybe it's worth a while to monitor your position. In the meantime, you take care, and I'll see you tomorrow morning. Bye-bye.